other one that I think could be somewhat of an analog here, Ramon, is this period from the beginning of 2018 to the beginning of 2020 with COVID low. And even though this shows a series of higher highs, lower lows, which is a broadening formation kind of a structure, is that you can see here that there's kind of a family resemblance to what Ramon is suggesting here going forward, in that you've got a series of lower lows that shakes out the prior low, creates a tremendous amount of pessimism. There's a huge amount of pessimism at the end of 2018. I mean, really, really noteworthy negative sentiment. Then that really big rally into the beginning of 2020, a lot of diverging characteristics at that high. And then, of course, we know the COVID decline had just immense pessimism. So, you know, the public and institutions too were just getting crushed by these extreme trading characteristics. And of course, what we're trying to do here is we're trying to think in contrast to the way that the public is thinking about these, so that we're not getting whipsawed the way these markets are designed to whipsaw people, and the composite operator types are able to extract capital from these people. We want to be with and on the side of the composite operator. So what you're suggesting here, Ramon, and then going back to that 50s to early 60s analog, which I think is fantastic, is a similar kind of a thing. But notice this, that there are really great accumulation structures that occur at the low where it says no capitulation of 0.8. And then there is a substantial distribution structure in at the peak there. And then I believe that that was the big combination of the Cuban Missile Crisis and then also the steel companies raising prices and setting off sort of a showdown between them and the Kennedy administration. And that was just a wicked decline, but a really great trading opportunity. The trend up and the trend down, very Wyckoffian characteristics in both extremes. And then look at this big accumulation structure down here. Yeah, that is very noteworthy, and I think it's textbook. So this is very interesting, and it has the opportunity for us to be able to trade these, but we have to start thinking like swing traders and see, everybody today is equipped with the orientation towards trend following, because that's all that you really had to do from 2009, 2010, 2011, all the way through the end of 2021. But now we're seeing a different set of skills for trading purposes, very much with a Wyckoffian orientation. Now this chart here that Ramon has put up is a point and figure chart that we've created, which is very simply a 5 minute data. Now, keep in mind that just because we're looking at 5 minute data doesn't mean that we're not looking at quite a bit of data, because we're looking at the characteristics of point and figure, 3-box method, and then 10-point scaling, S&P cash. And so we can see this count is in basically 2 segments. The gold segment is the first one, and that would be my operating count, so to speak. But here, look at what we have created now. This is not through the end of the day today, but you can see this count right here, just this period, which is the last week or so, because of all the volatility that's been in this market. Remember, point and figure is a function of volatility, not time. And there's a count here, and I would say an incomplete count, 4330, 4410. And these intraday counts can be quite powerful swing trading counts. Now, the larger count goes out 35 columns, 4870, 4950, which takes us to a marginal new high think back to Ramon's analog. Now, the other part of this is that this may be, yeah, go
Bruce,
ahead, Ramon.
right there, 40, slightly above 40, 48. If we're gonna go, 30% from the low, exactly to your count.
And it very well may be that that point figure count grows larger. And so I would just like to point out, Ramon, that, and of course, what we need to see is we need to see the market prove this count. And that would be by being able to rally up to that resistance area, which is around 40.90. And then note that if it can do that and give us a sign of strength, which is an important part of an accumulation structure, we talk a lot about those, and then pull back. Now we have the potential for a count, Ramon, that goes, maybe it pulls back into an LPS even. And then you have a count that could go all the way over here to the early May, which is that, there you go, preliminary support. And so that all could potentially be accumulation. One of the things we really try to work on is being able to visualize these unfolding accumulation structures before they're complete. And that's a big part of what Ramon does so well with his analogs.